Today, you and I are diving into a topic that's been making waves: ESG, or environmental, social, and governance investing. You've likely heard the term, but let's peel back the layers to see if it's more than just a buzzword. First off, ESG stands for environmental, social, and governance. These criteria aim to evaluate a company's impact on society and the environment. Sounds noble, doesn't it? Now, ESG investing is booming. Trillions are invested in ESG funds. But here's the million-dollar question: is this really making a difference? On the surface, ESG aims to push companies toward responsible practices. It allows you, as an investor, to align your financial choices with your values. But there are some wrinkles to iron out. One issue is the reliance on self-reported data for ESG scores. This can make it easy for companies to game the system. So, when you see a high ESG score, take it with a grain of salt. Another point to ponder is the difference between correlation and causation. A high ESG score doesn't necessarily mean it's driving a company's success. In fact, some studies suggest there's little to no correlation between ESG scores and profitability. Now, let's talk about constraints. ESG is essentially a set of constraints on how a company operates. Think about it. How can constraints lead to greater profits than operating without them? It's counterintuitive, isn't it? The effectiveness of ESG also varies by sector. For instance, in the energy sector, higher ESG scores can actually result in higher costs of capital. It's not a one-size-fits-all solution. Companies are also getting savvy at gaming these scores. They focus more on the score itself rather than making impactful changes. Be cautious about this. If we're serious about tackling issues like climate change, relying solely on ESG won't cut it. We need laws and regulations. This is a collective responsibility, not just a corporate one. Lastly, let's touch on the rise of passive investing. With more than half the market in passive funds, the influence of ESG could be diluted. So, what's the takeaway? While ESG has noble intentions, its effectiveness is still up for debate. For meaningful change, we need a multi-pronged approach that includes regulation, education, and genuine corporate responsibility. Thank you for your attention. Let's continue this conversation as we both strive for a more sustainable and equitable future.